Kathyn Rooney Vera, StoneX Financial Chief Market Strategist, joins us now. Kathyn, a lot of investors talking about the divergence you're seeing in the market today. How do you start to parse through the noise?
Well, your previous guest just said it, Shanali. I think that markets were priced for the perfect landing, and anything that deviates from that, even marginally, I think will cause disappointment. There's limited room for error coming into this year, and that's something that we at StoneX have been talking to our clients about. To hedge your bets, there are fat tail risks, and they can come from one or two opposing trajectories, and one of them is this robust economic growth, where you have, as Michelle Meyer correctly said, U.S. consumer has jobs. So yes, inflation is sticky. Service sector inflation is still high. People are paying for it, though, because they have jobs. So I think it's very difficult to envision a scenario where we have the U.S. economy growing at 1 full percentage point above potential. If last year the U.S. will have grown 2.8% and potential is 1.8, if were that to continue, inflation is very unlikely to move to trend 2%, which requires, of course, below 2%. So I think the markets are going to probably adjust if the economic variables come out, the economic data shows that we are not effectively entering a soft landing, which by definition is economic slowdown with a deceleration in inflation. At this point, we have inflation still kind of sticky, not at 2%, and we have economic growth remarkably robust.
How do you feel about certain sectors here? I'm looking at the Russell 2000. We have been waiting for that index to get its swagger back. And this week you saw it hard hit in the initial set of inflation data. You are still seeing a gain on the week. Do you feel good about small and mid caps?
Small and mid caps should do well if the Fed does reduce rates and if we see a benign economic environment. Anything apart from that, I think small caps can have a tough ride. For example, if the Fed is unable to cut the 100 or 200 basis points that have been priced in, then I think it's going to be a tough road. So look, I think if economic growth remains strong and 2024 is a repeat of 2023, which is immaculate disinflation and strong economic growth, then I think large caps do well this year. If not, if we get, the Fed that has to hold rates all year or, God forbid, hike rates, then I think all bets are off. And it all comes down to inflation. And once again, I agree with MasterCard. The fact is that the labor market is all important. And until we see some cracks therein, inflation can keep moving higher and people will still keep buying those goods and services.
Kathyn, are there parts of the market that are looking a little bubble territory to you right now?
Well, yeah, I think the S&P 500 in general looks pretty stretched in terms of valuations if you look at history or if you look at international equities. So if we were to enter an economic deceleration, which is a soft landing, I think there's opportunities internationally. And in that respect, I would be looking outside of the U.S., even in Latin America or in Japan. But right now, I think that the U.S. is looking pretty frothy, especially if we consider the potential that there is some economic surprises in the offing.
When you look at the whole week, you have really seen a ride higher in yields from the 2-year to the 10-year and even further out. How has that changed your thinking around discounting, knowing that perhaps rates will be a little higher for longer?
Oh, it's a great question because one of my biggest calls this year was the steepener, the 530s or the 730s. And that trade has been pushed out. So there's going to be better entry points. The trade we did get right, Shanali, was the put spread, the short put spreads on March futures contracts. And that worked out remarkably well. So we saw a more than 150% return on that when the markets were discounting the first Fed cut in March. We said that's very unlikely to occur. It's more likely in June. And that call has paid off very well. But I think when there's this consensus of equally weighted S&P and the 530 steepener, all of those things can be pushed further out if we get sticky inflation and we continue to see a Fed that's reluctant to cut.
How do you feel about mispriced opportunities? Is there anything that has been sold off in this market that you would pick up at this point in time?
Well, yeah, I think that the 2-year Treasury looks attractive at current yields. I think that if, in fact, we do get Fed cuts, which I do think are in the offing, that all those $6 trillion in money markets that are yielding, 5.3%, that money could move into short duration Treasuries. So I think there are opportunities I still like hedging our bets. I still like put options. You can buy less than 4.5% put option that covers you at the money for the next 12 months. So there are opportunities in the market right now, and I would say that those opportunities come with hedging your risk exposure and buying those defensive sectors in a counter-cyclical portfolio policy that if things don't pan out as we came into this market anticipating, then they pay off nicely for a portfolio.
Talk more about those hedges. For the people who may get concerned about upcoming economic data or any other further sell-offs just due to valuation concerns, there's a whole host of things that could go wrong here, Kathyn. Where do you look for cover?
Well, if you're an equities investor, I like certain sectors like staples and utilities, energy. These are kind of more defensive sectors. I like the put options, as I mentioned. I like gold and I like cash, and I think short duration treasuries are a way to go in an environment where perhaps we get either a hard landing or we get a reacceleration inflation. And I have a 10% probability, Shonali, or I came into this year with a 10% probability that we continue to grow at a torrid pace. Reaccelerating inflation, the Fed has to not cut or even hike. But I think the possibility of that is growing. So I would look at inflation hedges, and I would also protect with more defensive sectors.
Gold and cash, safety trade still in vogue here. Kathyn Rooney Vera, thank you so much for your time. That is StoneX Financial Chief Market Strategist. Now, still ahead, we're going to take a look at the companies making the most buzz on social media today. Social